the direction of the Fed next year? You already see record futures wagers in the market, with a lot of investors betting that the next Fed chair will be dovish. But given where we are right now, given the concerns about inflation, especially on the heels of all of this geopolitical tension, do you think that because the president wants lower rates, that the central bank can deliver them?
Listen, I think the big question is the president going to appoint a shadow Fed chair, right? There's a lot of talk that he's going to, already kind of semi-nominate someone, 9 months, 12 months in advance of when Powell steps down. That would be, I think, not warranted or not wise. I think it would create a really steep yield curve, right? People will be like, wait a minute, if we're going to kind of give up Fed independence, or going to start pressuring that. Right? And so I think Powell's done a really admirable job of just holding the line on Fed independence. The president can say whatever he wants. It's not going to affect what Powell's doing. The moment that gets questioned for real, and there's pressure on the Trump administration to actually do this, I think that could be very, very negative for markets. The dollar would sell off pretty tremendously. Yield curve would steepen. And so we'll see. It hasn't happened yet. Trump loves a lot of bluster. And we'll see if they go that next step. But I think that next step would be a really, from a macro trader, it would be easy to just sell more dollars and put on more yield curve steepeners. But I think it would be very bad for the country.
Why would, when I was a kid, Mike, we had a shadow Fed, of course, not in the White House, but Alan Meltzer at Carnegie Mellon put that shadow FOMC together, and they were quite vocal in their opposition to the moves that you saw from Greenspan, from Bernanke, and others. Why would it make such a huge difference if there was a shadow Fed sort of coming from the cabinet?
Well, because, again, for academics or for pundits to comment on is Powell making a mistake or not, that's what we all do, like macro traders do, economists do. When it's seen being directed by the president, it's one step closer to no Fed independence, right? And listen, the people you hear names kicked around, Scott Bessent moving to the Fed. There's no way Scott Bessent is going to be, a Fed chair at the behest of doing whatever the president asks. It's just not who he is. Same thing with a lot of the candidates. And so, it will be hard for them to find a credible candidate that will do what the president wants, right? Almost by definition. And so I just think the closer you get to losing Fed independence, the worse it is.
By the way, Mike, this is why I ask. Really, the question I've been kicking around in my tiny little brain since a call for a 200 basis point cut came from the president on Truth Social is, would that really reduce debt service payments? Would that really bring the 10-year yield down? If Jerome Powell came out today and said, all right, the president asked me to cut by 200 basis points, so I'm going to do it. We're going to reduce the benchmark rate by 2%. Wouldn't that have the opposite effect on the Treasury curve?
It certainly would. Like the long end, 30 years, 10 years would sell off, not rally. And I think everyone who's been in, the study of macro for a long period of time, you see other countries have tried it. I mean, Erdogan did it in Turkey, and it was a disaster. And so listen, I think the kind of names getting kicked around would never do it, right? Kevin Warsh, there's no way he's going to take the Fed chair and do what the president says. They're going to define their independence. And so I have faith that we're going to continue to have independent central bank, and part of this is politics, right? President Trump is a master at politics, right? And so, him having someone to blame is a good thing from him from a political perspective.
Mike, what is the trade? You had mentioned a little earlier that, this doesn't bode well for the dollar, and the long bond could be under pressure as well. The 10-year, we're looking at it around 435 today. Realistically, where do you think it goes? And as a macro trader, would you go really short? Would you take that pain?
Listen, if I thought we were going to lose Fed independence, I would be limit short the dollar and limit short long bonds. I don't think we're going to lose Fed independence. I really don't. I think, like I said, I think Trump likes to bluster about this stuff, but I don't think he's going to cross that red line.
What do you think will happen to risk assets if President Trump joins Israel in support of an attack in Iran? If we contribute bunker busters, if we contribute actual troops to a full-blown war, how does this market, which has been pretty good at ignoring geopolitical issues over the last few years, how does this market then react?
Yeah, it's a great.
While we're throwing up hypotheticals, Mike.
It's a very difficult question. I think, listen, if we went with bunker busters and took out the one big facility that everyone's talking about, the immediate reaction would be oil up, stocks down, probably even dollar stronger, just because people are short the dollar and people want to get out of risk. I think Trump would only do that, like when I'm thinking through the logic, if he would then say the war is over, Israel stand down and have a prearranged agreement with Israel that, like, we'll take out that one facility and then that's the end of the war, and say the same thing to Iran and try to declare peace at that point, that could be wildly bullish. You know, it's an unbelievably tricky situation. If we just enter the war and it's protracted, categorically bearish. But if it's a one strike declare victory, it could, actually be the exact opposite.
I want to look at risk assets for now. You're looking at Brent crude trading around 75. This fear about oil prices rising higher, causing a dent in the trade in the last couple of days. The S&P 500, there's a sense by a lot of the market that it's not even just this kind of underlying inflation or geopolitical risk environment or even these big picture what ifs that you and Matt have just been talking about. It's this idea that even if the Fed is just a little hawkish today, then it could send a lot of this recently found risk appetite off the train. What do you think happens here? I mean, what are the trades that set people up for the rest of the year given all of these uncertainties?
Yeah, it's, the stock market has been a conundrum to people because it trades spectacularly well, despite what seems to be all kinds of geopolitical issues and internal issues, right, between tariffs and wars and this, the fights between, Trump's parade on one side and the No Kings parade on the other, right? All this discord, the stock market keeps chugging along. Partly that's because unemployment stays low and retail continues to be a participant. I think partly because of this giant data center build, right? This huge infrastructure AI build that's happening, which is adding incredible amounts to GDP. I've come to realize that despite bad government, we have such amazing capital markets and such an amazing entrepreneurial class that it's kind of holding off what feels to be all this, uncertainty. And so stocks don't feel like they want to go lower. Everyone I know has been underweight them, think they're overvalued. They trade like they want to go higher.
Mike, we only have about a minute or so left here, but we still want to ask you about crypto. We want to make sure we're getting your thoughts there, because if you joined us just a couple of hours ago, we would have asked you about the stablecoin bill and what that actually means for the future of finance. You have, of course, companies tied to it, particularly Circle, just flying since its IPO. You run an investment bank. I'm sure you have thoughts about how that should have been priced ultimately. And you have companies like JP Morgan saying that they're going to get in a bigger way. Amazon, Walmart. Do you think something fundamental is going to change about the financial system now that that bill has crossed the Senate?
Listen, we set up Galaxy 2017 with the idea that institutions would finally come to the market, and they're here. And it's a really exciting time. We're going to get the stablecoin bill and then hopefully a market structure bill. And it's going to bring in TradeFi into this technology. We're going to see tokenized equities. We're going to see perpetual futures, which is a crypto idea, be brought into the U.S., both for crypto and for non-crypto. It's a different way of looking at derivatives. And so I think, like, what I'm thinking from our firm's perspective is we're going to partner with people, we're going to have white label solutions for people, and we're going to have our own solutions for our customers. That every crypto company is now thinking, how do we go to this next chapter?